Hello and welcome to Car Dealer Live. I'm James Batchelor, and today we're chatting with Auto Trader about used cars and EVs. Joining me is Auto Trader's John Davis. Hello, John.
Good afternoon. How are you?
Very good, thank you. Very good. Let's get stuck into it then, John. Some used car data came out very recently from the SMMT. Transactions were down 8% year on year. Um, is that kind of data, was that kind of surprising to you? I mean, what were you seeing during 2022?
No, I think that was probably kind of where we'd expected it to land. I actually think the year was a pretty good one for the sector. If you look internationally, I think Germany's used car transactions are down about 16% year on year. So it wasn't bad by sort of international comparison. And I think the main story, which has been very well documented, is we've seen a big weakness on the supply side. So this has been the subject of many car dealer lives, but the challenges around new cars are very well known, I think. And obviously what that means is you have less part exchanges coming through for retailers, and also less cars going through the auctions and so on. So that does naturally have a bit of a drag on used car transactions. But I think the way I'd frame the kind of 8% down is you do see 8% down across the whole of the used car transaction volumes. But if you look by age cohort, it's quite a mixed picture where basically because you've had that limited supply on the new car side for, 3 years now, and we've missed out on, 2.5 million transactions in that space. Obviously, that means you've got a lot less younger used cars coming through. So you see a lot lower numbers on the used car transactions of under kind of 3-year-old cars. But if you look at, like, say, 5 to 10-year-old vehicles where supply is actually a bit freer, you see similar levels of transaction volumes to the ones we saw before the pandemic. So the real story, I think, here is actually one of supply side weakness. On the demand side last year, we saw a pretty healthy picture. It wasn't quite at the levels we'd seen the prior year where, as we kind of finally came out of lockdowns and so on, it was actually very, very strong. But it was still pretty good levels of demand last year. And that, as again, has been a subject of many discussions that you've had, meant we saw pretty strong used car pricing last year. Dealers turning cars pretty quickly, and therefore it's been pretty healthy trading conditions for retailers. So I think overall on used car transactions, it was 8% down is kind of where we'd expect it to be. But I think actually towards the end of the year, we started to see some increasing strength in demand. So I think in the data that the SMMT published, you see that December year on year was actually up in terms of used car transactions. So as we came through the back half of last year, things continued to get better and better.
Yeah. And I mean, the transaction data always grabs the headlines, doesn't it? But there's, as we know, there's so much more to it than just simply transactions. So
Yeah.
I last time I spoke to Ian Plummer, he was saying that January started off pretty strongly, really. Perhaps a bit of a surprise, I'm not sure, but I mean, how's it been going since then? January into February. Has the year started off strongly, do you think?
Yeah, very well, actually. We had a record audience month in January, and we were on TV just back end of December, early January, which will have helped a little bit. We've certainly heard other players in the market talk about very, very strong starts in January. We to give a kind of number, we saw about just over 1.5 million people every day on the site, which is very robust indeed. If you work out what that is a portion of UK population, there's a lot of people out there floating around looking for a car. And actually, in all of the metrics we can see, January was very strong. So I think when Ian spoke to you, it's kind of middle of the month. We're about a month on from then, and if anything, things have only strengthened since then. And I think there's probably a few reasons. One is, particularly on the used car side, for most people, unless you live in, say, central London or central Manchester or somewhere where the public transport network's pretty good, cars are a fundamental need for most motorists. And if you've got a commute or if you've got to take the kids to school or whatever, you do need that. There has obviously been a level of disruption, so we say, in public transport with all the strikes and so on, which has probably helped. And I think that the sort of structural dynamic is you've got these kind of lost transactions that just haven't happened. And if people are starting to think, oh, I might be in the market for a new car or used car this year, those people I think are probably coming back into that, where they might have been in a car for, say, 3, 4, maybe even 5 years. I think there's a level of kind of latent demand that still sits there in the system. And to your question, we're seeing exactly the same thing as Ian mentioned in January. We're seeing in February, strong audience metrics. Pricing is really good. Stock turn is very quick. If anything, probably slightly quicker than we'd anticipated. Average price of car is remaining solid. And I think so far in February, we're seeing used car prices up about 0.8% versus January, kind of month on month. And usually you'd see before the pandemic, between January and February, things move about 0.5% or maybe slightly lower than that. So again, it's very, very good. So yeah, all in all, a very robust start to the year, which is good.
Yes, no, absolutely. Now, last year, as we know from industry data and industry that and data that you guys published, I mean, it was a strong year for EVs. But things, well, the narrative around EVs has changed a lot, particularly into 2023, hasn't it? I mean, what's your view on all of this?
Yeah, I think it's a really interesting question, this. And I mean, so I was involved in EVs when I was back at Nissan maybe 10, 11 years ago, when we were selling kind of 1 or 2 a week. So I think compared to that, it's absolutely rocking and rolling at the moment. And I think last year there was over 70,000 used EVs that changed hands. So versus where we were a couple of years ago, there's been huge strides, and clearly the demand for electric is materially higher than it was. And that's all sources of sort of good news. And I think the other part of good news is, maybe I remember presenting stuff a couple of years ago saying there's not much choice in the used market if you want to look for a cheaper used electric car, that we are increasingly, by dint of the fact that more are coming back into the market, getting more choice. And I mean, if you're looking for an electric car that's under £10,000 now, there is plenty of choice. We've got about 500 cars on the site. So that is good, that we've got more. If you're maybe less wealthy, you are getting more entry points into the market as more of this sort of supply comes back in. However, the challenge is, obviously, towards the end of last year, we're starting to see the supply side come back quite quickly, particularly in that kind of younger used area, which is maybe slightly less accessible for most families. And we're seeing supply increase a lot quicker than we are seeing with demand, which is why there's been lots of noise, well-publicized noise around pricing pressure on the used EV market. And I think if there's one thing I'd be keen for people to take away, is that it is quite a mixed picture. And I think the danger with EVs is to talk about is a big sort of blanket thing where EVs are either good or EVs are bad. Yeah. And in this instance, it's mixed by make, by model, by region, depends on quite a lot of factors. And we really encourage the retailers we work with to use the data sets to try and work out what's going well in their area. And you can see some bright spots. There's, of course, pressure, and obviously the action that Tesla took has impacted their valuations to some extent, although they have received a bit of a demand boost as well, which is interesting. But I think you see it where some EVs are turning in sort of 25 days and some EVs are turning in 45 days. So it's quite different by market, and that will vary even more so by region. So we saw in January and February, if you had a Peugeot E2008 or a Citroen EC4 or an MG ZS, they're actually turning quite quickly. Some of the other cars turning a lot more slowly. So this is where I would say the nuances in the data set. So I think and the question's a very good one, what's happened to used EVs more generally, but it is quite mixed by make and model. So, and you would be unsurprised to hear someone like me say this, I think it's a follow the data game, this one. Work out what's selling in the local area for if you're a retailer stocking EVs, and use the data to work out which cars to source and stock for your dealership in your local area. But it is mixed, and the picture is quite nuanced.
Yeah, no, I agree. I think it's very easy to lump EVs together because it's still a relative new fuel type, isn't it? It's too easy to collate them all together, really, isn't it? But one of the interesting things that I saw recently was, I mean, you reported an increase in interest for used car finance. Could you just explain what's going on there?
Yeah, this is an interesting one, because I guess if you, on a real sort of initial view, you'd think, well, we've got the base rate from the Bank of England going up. And yet people like us saying, and plenty of other providers saying, oh, actually, we're seeing used car demand being quite strong. What's going on here? That doesn't seem to tally. So I think there's a few factors at play. The first is cars are, as I kind of intimated earlier, particularly in the used car space, they are an essential purchase for most people. When they're looking to buy a car, it's not something that's discretionary. They're having to do so. They need a car for whatever reason. And recent data on unemployment says that there's a lot of people who are in work. We're not seeing unemployment rise really, really fast. So we've got a lot of people out there who need their cars for whatever reasons, whether it's work or so on. And so the question then is, if you're in the market to buy a car, how do you access it? And versus a couple of years ago, used car prices have risen pretty materially over the past few years, meaning that, let's say, I don't know, back 3 or 4 years ago, you had, say, 14,000 and 15,000 pounds that you could afford to spend on a used car. That same car is now worth probably 18,000 or 19,000 pounds, maybe even 20,000 pounds, depending on the car that you're looking at. And so if you're looking to try and access that car, in the current context where cost of living is a real pressure, and you're hesitant to make a significant outlay, what finance offers is a real stability of outgoings, which I think in the current market is what a lot of people are after. And if you've been, say, in a PCP before on a used car or a new car, you will probably, because used car prices have risen, have equity in that existing finance deal. So you'll probably be keen to kind of use that to get into another vehicle. And so then the question then is, well, is the finance rate that you're looking at, the interest rate, is that a negative to when you're looking to buy? And actually, I think it'd be fair to say that used car APRs aren't that closely tied to the base rate. Of course, they are on some level, but it's not like the average used car APR was 3% and the base rate was 0.5%. When the base rate was 0.5%, the average used car APR was probably nearer 10, and it has nudged up. And to be fair, lenders have probably taken a bit of a hit here, maybe even retailers as well. But that does mean that it wasn't quite as closely related to, say, mortgages, where it's really obvious the impact that you have on your own personal mortgage if you've had to renew, particularly recently since the budget in the autumn. And to give an idea, if you were looking at, say, a £15,000 car with £3,000 down on a HP maybe a year ago versus today, you're probably paying £10 to £15 per month more, which I would suggest for most families is manageable, particularly if you've got your energy bill flying through the roof. The idea of locking in 10 to 15, maybe 20, £30 a month more for 3 or 4 years is probably something you'd be very willing to do for the consistency of outgoings. So I think they're probably some of the dynamics that are playing around in finance, which is why for a lot of consumers, it's still a very attractive thing for them to choose.
Yeah, it is very interesting. Very interesting indeed. Now, last month, of course, was NADA, an event that lots of car dealers in the UK are naturally very interested in. One of the big headlines that came from that, though, was used car prices are starting to fall in the US. Well, they've been falling for a while, but we're becoming very aware of the fact that they are dropping. Do you think that is something that could cross the pond and prices are going to start falling in the UK?
Yeah, I think this is a really interesting one, and the short answer is no. But I guess I should qualify that with, we think what's happened in the US and the UK, and to be honest, a lot of markets has been kind of similar enough to be able to make some comparisons. But actually, when you look under the sort of skin of it, it's actually quite different. So take the US versus the UK. In the last couple of years, we've seen new car registrations down around 30, 32, 33% versus where they were before the pandemic. And actually that's been more than most markets globally, particularly in Western Europe, but especially when compared to the US. The US has been down between, say, 12, 13, maybe 18% in each year. So what you can see is that the supply side, the amount of cars coming into the market has been a lot. The US has had a lot more cars go in than the UK. So our supply constraints have, if anything, really helped that kind of pricing landscape, because demand's remained okay. Supply's been constrained, pricing remains strong. What's happened in the US over the last couple of years is that kind of new car volume coming into the market has been less than it was before, but not loads less. That obviously impacts into the used car market. And so they've seen a lot more volatile pricing landscape where it's kind of shot up quicker than we saw here, then come back down, then gone up, then gone back down. And then in the last probably 9, 12 months, it's been negative. And even in the last couple of months, it remains negative. Whereas here, the kind of glide path has been a lot more even and a lot more consistent. So I would say the dynamics are quite different, and therefore you can't just assume that what's happened in the US is going to come across to what's happening here. And another kind of metric we look at a lot internally is days in stock, so how long cars are remaining on retailers' forecourts. days in stock in the UK moves around seasonally, but like we talked about a little bit earlier, has remained very strong. And actually, so far this month is really good. In the US, it's actually been lengthening month on month since about mid 2021 on used cars. So that's a very different story in the US to the UK. And I guess more broadly, it actually sounds from what I've read that the US have had a good start to the year, but they're still seeing this kind of days in stock lengthening and pricing kind of eroding and coming away. Again, very different here. So I would say be careful about comparing and saying therefore because what we're seeing in the US will automatically flow across to the UK. And in some ways, on the big macro trends like digital retailing, we think that's probably true. But specifically around things like pricing or maybe even EV dynamics, they are very different market by market.
Yeah, because I was just going to add to that, comparatively, we've got a flourishing used EV market, haven't we? Even though we don't like to think so, but compared to the US, I mean, they're quite far behind, aren't they?
Exactly that. And I think you see this across Europe. The different EV penetrations by market really are quite dramatic. And Norway is obviously miles ahead of everyone else, given the public policy and fiscal statements they've made there. But in the US, again, they are quite a bit behind on EV uptake. So we're probably a bit ahead there. So I think it's probably one of those things where it's natural, particularly if we've had a lot of people go out to Dallas and see the US, and some of the technology they've got out there is amazing and probably ahead of where we are here. But I think we probably just need to be careful. We don't assume what's happening there is going to flow across the pond, to your analogy.
Terrific, John. Some really interesting stuff there. Thanks for joining us today.
Not at all. Nice to see you.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.